Hello traders, and welcome to the SMC Trader Mentorship Part 2, where we are gonna be talking about market structure, top-down analysis, and I'm gonna be telling you which time frames you have to use in order to become successful. Of course, those time frames are gonna be different compared to the time frames that we are using in the SMC Academy, which is the same with ChrisFX Academy, of course, where we are mostly focused on day trading. But this is gonna be more than enough for you to perfect your trading and debunk some of the most important myths around time frames, and I will show you step by step what you need to do. Let's now begin with our video. And here we are on Nasdaq, and I'm gonna be continuing with the same example that we started with our first episode, which you can find by clicking on the top right of your screen right now. And what I'm gonna be doing, I'm gonna start with the analysis from the monthly time frame. I'm gonna start the analysis from the monthly, and here we can see one very important thing. What do we see? We see that we are inside this monthly fair value gap. We rejected it once, and now we just broke below the previous monthly candlestick, and we are rejecting inside its range with the current candlestick. What you can do in this occasion, you can go ahead and scale down to the weekly time frame and check out the story once again if it confirms what you have seen on the monthly. And for the time being, I can leave this FVG, this monthly FVG, and then I will scale down to the weekly so that we can see exactly where we are. Inside this monthly fair value gap, what do we see from the weekly perspective? We see that we broke below this swing low, and this is a swing low. Why? Because it is lower than the low on its left and then the low to its right, and then we retraced right back into the range and inside this monthly fair value gap. So our bias is that we are gonna be going towards the upside after what we have seen right here. We can also go ahead and check out the daily as a third time frame in this whole analysis, and we will see something similar. By the way, if you want to also learn how to interpret every single candlestick, because this is very important in this occasion, go ahead and join my academy or my signals, or book an one-on-one mentoring with me, and I will teach you once and for all, and you will not need to spend your hard-earned money anytime soon to any other trader who is not gonna teach you exactly what you want to be taught, but I am gonna do so. This is a guarantee. Now, since we have this premise that we are gonna keep going towards the upside, and do not get confused because TradingView is printing ahead, so this week has been printed ahead. So now technically that we are expecting what we will see, I will go ahead and I will tell you that you have to scale down to the 1 hour time frame. And again, you can go ahead and use any combination of time frames that suits you the best according to your own strategy. Here I will go ahead and highlight points of interest such as this order block, and I will check if I will get a significant reaction in order to look for buys, of course. Now, you might ask me, Chris, we did not respect this order block that you just highlighted. Not at all. We broke below it, and we also did not respect this huge area, which is the monthly fair value gap. And I will answer that you are absolutely mistaken, because what did we say? Let's check it out from the weekly as an example. Now we are down here at this part of the week, and I mean the candlesticks week. This is what I mean. So it is very possible that if on the hourly time frame now, even though we have penetrated this FVG, if we see a significant change of character with the creation of a fair value gap, it is possible, if this happens inside this area, that we will be buying, because we want to look for buys, of course. Here we do have our change of character, as you see. I will be now deleting this huge area we closed within this overall area of the monthly FVG, and behind we have left this fair value gap on the hourly time frame, and we have also left this order block. So I have two very important points of interest where I'm waiting for price to retrace right back into them for me to take a trade. Now, two things that you can do if you have a daily job, for example. You can go ahead and you can take your trade instantly right here. You can place the stop loss all the way down there. Okay. Or you can place your stop loss if you're trading just FVGs a little bit below the FVG if you want to play it more on the risky side. So you can go ahead and say, I have this FVG. Let me do that for you. This is a way to enter. You have this FVG and you can put another half of this FVG and go for the order instantly. So you can do that in this occasion, which means I didn't even need to do that. I could just, without this line, I could just take this area and place it exactly the middle of it at the bottom of this FVG. So you can place your stop loss right here and your entry at the top of this FVG. Or you can place your stop loss right here to give it more space, half of more of the space, let's say, half more of this FVG, and you can even place your entry at the middle of it. Let's see what would happen right now. There you go. We are into the trade and we are not out of the trade. Here we are out of the trade though. Instead of doing what I showed you, if you afford to be in front of the charts, what you can do once you see those reactions, and remember this fair value gap and this order block are being respected, you see all of those wicks, what you can do in this occasion, and I took this trade live by the way, you can scale down to the 15-minute time frame. So the time frames that we worked with was the monthly, 1 month, the 1 week, the 1 day, and then we went to 1 hour, and now you will see our entry will take place inside the 15 minutes. Again, in the ChrisFX Academy, in the mentoring and in the signals, we are using different time frames, such as the weekly, the 15-minute, we go down to the 1-minute time frame. But here, for this mentorship, we are going to be using those time frames as I showed you. Now, after those rejections have taken place on the 1 hour time frame, you can see this hour needs another 15 minutes to close. You see down on the clock, you can see that we are at 9:45. Let's wait for this hour to close, which means that the hourly candlestick has now closed. What do you see here? You see that we changed character on the 15-minute time frame, exactly right here, which also constitutes a beautiful breaker block which falls on top of this fair value gap. What you can do, you can take your trade now with a pending order either here or from the breaker. This is a way more secure trade compared to the first one that we talked about, and I went a little bit too fast. The breaker blocks usually work a lot and I have made a video on them. Let's go ahead back in time and show the activation once again. So you can do this thing and look right now over here, you get activated. I took this trade in the first live session that I did and I showed it live, and I said that we should target a daily zone that was all the way up there. Now, what else you can do instead of entering from the breaker block and from the FVG area, if you're very ambitious, you can say that I want to take my trades from the body of this order block. So your stop loss now would have been limited to this from this, half the stop loss. Okay, now you would be having this stop loss exactly right here. So this would be the trade for you, an amazing trade. And of course, if you would be activated where I showed you, your entry would be right here. And you would target this, and I think way more, if I'm not mistaken, or at least more for sure. Let's see. Let's go back to the hourly time frame. Yeah, this went for way more already, and this is the entry that we got. I got a little bit better entry. Exactly. And then it came back and it would have stopped you out for the rest of the position. But I had a very precise area to target, and this area, I will show you what this area was. It was this fair value gap right here, at least the top or the middle of this fair value gap, this daily fair value gap. As you can see, we even went for its middle. If I take my gun box and I take it from the top to the bottom, you will see that we could have hit the middle of this gun box exactly for a 5.5 to 1 RR. Nonetheless, I had said this would be the overall target, all the way up here and not at the middle of this FVG. So, what did we explain on this lesson? I showed you how to do the analysis starting from the monthly time frame, moving down to the weekly time frame, then the 1 day, then the hourly, and then the 15 minutes. We identified areas of liquidity from higher time frames such as the monthly, the weekly, and the daily, and other points of interest, and then we scaled down to the 1 hour. When we saw an additional grab of liquidity with the creation of an FVG and a change of character which closed back in the range of the monthly FVG, if you recall, we had a huge monthly fair value gap, we waited for price to come back into either this order block area or the small FVG that you see here on the hourly. Then when price came back there, we scaled down to the 15-minute time frame. We identified a change of character, which was this one. And then I told you, you can take the entry either from the FVG or from the top of it or from the breaker block or from the body of this order block right here. This was our today's lesson. If you want to learn way more stuff and become successful and get your mindset correctly, which is the most important thing that is holding you back besides your strategies, so that you don't have a very specific, robust strategy, then go ahead and click on the links down in the description and enter one of my programs, and it is guaranteed that you will become successful. This is gonna do it for this second episode of the SMC Trader Mentorship. The SMC Trader signing out.